Hello and welcome to Accounting Information Systems. I am your host, Dr. B, and today we're going to talk about purchases and payment processes within accounting information systems. We will cover things like the relationship between purchasing and supply chain management, how inventory is purchased, how fixed assets are purchased and acquired. We'll discuss accounts payable department and how they handle payments, and we'll also talk about how accounting information system stores data generated in the purchasing and payment processes. So first, in looking at this, we want to discuss what are purchasing processes and payment processes. Purchasing processes, of course, is how we acquire, procure the necessary things to operate the business. And the payment processes are how we pay for those resources. Both, of course, have significant impacts on the business and the business's success. So it's important for us to understand how these processes work. And looking at this very simple example of how a baking company would purchase and pay for equipment or inventory costs, uh, or paying for their employees, etc. So take a look at this flow chart. First, we have the acquisition and payment process, or we're purchasing our inventory, property, plant, and equipment, uh, and we're going to, of course, pay our employees. And so how do we do that? Well, there's really two ways to purchase and pay for things, and that's through financing, which could include borrowing, or it could also include equity rate fundraising. Or alternatively, it could be used simply by organic operations, which would mean that we're using the collection of cash from our customers to pay for the operations, which is hopefully how it should work, right? We want to grow a business organically, and the best way to do that is to simply use the cash from the collection from our customers to pay for things. So we purchase using the cash from our customers or from other means, and we pay for our operations. Those costs, of course, get converted into the overall operation. So we purchase our raw materials to convert that into work in process, and then ultimately finished goods. So if you think about that flow of inventory, uh, you'll be able to understand more about the purchasing and payment process. So in the conversion process, we're converting that inventory into the raw materials into work in process, which is the heart of the business. We're producing our inventory, our products to sell to our customers. So conversion process includes things like product design, production planning, production scheduling, production operations, and of course, quality control. And then once we've produced our product from work in process, we're converting it into finished goods, we're selling it to our customers. And then that would be that final step of the cycle, which is marketing, sales, and the collections process. This is where we're selling our finished goods to our customers through sales, and we're collecting cash from our customers, whether it be through their account receivable or through cash over the counter. And then that cash gets used again in the beginning of the cycle through purchasing inventory, etc. So this is the life cycle of purchasing and payment processes. So in talking about inventory, as I had mentioned, as you know, there are three types of inventory on your classified balance sheet. First is raw materials. This is the direct materials purchased from our suppliers in a baking company example, our raw materials will be things like sugar, yeast, eggs. Those will be classified as raw materials. We purchase those from our suppliers or vendors. We then take those raw materials and we put them into what we call work in process. This is where we're in the process of baking the cookies, right? We're using the sugar, yeast, flour, eggs, etc. Mixing that all together, work in process, right? We're baking, that's all work in process. And then, of course, then we start packaging, also work in process. But once the cookies are baked, we put them into a package. And then once the package is complete, we got the the box, the saran wrap or whatever, and the label. We take it out of work in process and we put it into what we call finished goods. That's where the product is ready. It's complete and available for sale to the customer, right? So understanding inventory is really important when we talk about purchasing and payment processes, because we need to purchase and sell ultimately, right? So looking at this high level flow chart and thinking about our inventory. So we have an inventory control system that tells us what we need to purchase and when. So I need to purchase my raw materials from my vendors. I try to do that just in time. I do that through what we call a purchase requisition. I acquire my raw materials from my vendors, and then I put it into work in process, and then ultimately it becomes finished goods after I've gone through that process. So in thinking about that flow, the purchase requisition tells us what I need to order and when. I get a quote from my vendors. I place the purchase through a purchase order. When I receive my inventory, it comes with a packing slip, also known as a receiving report. I match it against what I received. I put it into my accounting information system, and then 30 days later, through accounts payable, I'm paying my vendor, right? Through a check or electronic funds transfer. That's the process, right? That's the purchase process from start to finish. And because it ultimately becomes payment process, as you can see. So the inventory control, very important because it tells us when I need to purchase my new raw materials, right? For example, in our baking example, when I start to run low on sugar, I have a certain threshold that I meet. Once I meet that threshold, I can tell my inventory control system to place an automatic order to get more sugar, right? Because I've reached that minimum inventory threshold. We call it a part of inventory control systems. So what happens is that based off of that purchase control system, I can automatically generate a purchase order that gets sent to my vendor, or I can manually issue a purchase order that says, hey, vendor, I need more sugar. So here's my purchase order. And again, that could be either generated automatically, or it could be done manually. Then, of course, when I receive my order that I place with my vendor, it typically comes with what we call a packing slip. It tells us the quantity and the descriptions of what I'm receiving. Ultimately comes with we put the packing slip data into our accounting information system to generate what we call a receiving report. We're verifying, yes, we received exactly what it is. And if there's any discrepancies between what we received and the purchase order, then we prepare what's called a discrepancy report, and we send that back to our vendor. And then any adjustments can be made, whether it be returns and allowances type of adjustment or whatever. Then, of course, accounts payable. In our accounting information systems, we take the invoice that we receive from our vendor, we enter it into our accounting information system. Includes the date, which is the most important number on here, the quantity of goods, what's due, when it's due, and of course the payment terms. We enter that invoice data into our accounting information system, and then ultimately we pay eventually. Usually within 30 days. It all depends on the payment terms, right? Yeah, it's in today's age, it's very easy to do this step. Sometimes it could even be automated. Oftentimes it's just a matter of taking an image of the invoice that you received or downloading that invoice from your email system into your accounting information system. That's it. There might be some coding involved, but it's relatively easy. Managing the inventory in your accounting information system is an extremely important process in the business, as you probably already know. And this is because it allows for the communication across purchasing, conversion, and sales processes, right? Very important that you manage your inventory accordingly, because the last thing you want to encounter is a stock out situation, which is where you don't have that raw materials to perform that work in process. And that's a result of poor inventory management, right? So and you also don't want too much inventory sitting in your warehouse, because that just means that your cash is tied up in that inventory. So inventory management is a critical component of any good accounting information system. And this relates very directly to supply chain management, which of course is the process of overseeing that life cycle of procuring those raw materials like sugar, all the way through the sale of the finished good to the customer. The supply chain helps us to effectively manage our inventory across its stages, right? Raw materials, work in process, and ultimately finished goods, because it helps to collaborate among our suppliers, distributors, contractors, transportation, warehousing, and retail, etc. Right? Of course, the goal here is to produce a very cohesive service to our customers, through selling our products, etc. Supply chain management, at a very basic level. We oftentimes think about the information as it flows using our accounting information system, but the best way to understand how that information flows is to really think about the physical flow of inventory and how it moves through our business, right? So, and it all really starts with that initial purchase order. Purchase order goes out to the vendor. The vendor comes, sends us our inventory. So we enter our raw materials into raw materials. Then eventually we transfer it out of raw materials into work in process, and then out of work in process into finished goods. So thinking about that physical flow of the inventory, that information is also flowing with it, right? It's because we're adding cost on at each process as the inventory flows. So here we have the example of our baking company. Starts with raw materials. We made an agreement with our supplier for those raw materials. Raw materials flows into work in process. Here we have it as manufacturing. It flows out of work in process into finished goods, and ultimately distribution to our retail location, which is finished goods, and that comes out of finished goods and goes on, which is on our balance sheet, flows out and flows onto our income statement as cost of goods sold when we sell to our customer. So, and then of course we use that cash from our customer to complete the cycle and then purchase additional raw materials. Which brings us to our purchasing process. It's so important to understand that flow, that physical flow of what it looks like in order to effectively manage your relationship of your inventory and suppliers and your other departments. So it starts with a purchase requisition form. The purchase goes through, it's authorized, we select the vendor, prepare purchase order to be sent to the vendor. It goes to inspecting the shipment from the vendor. If it's good, we enter the receiving report and then store the goods. But you see this flow chart, right? Uh, this can all be automated with your accounting information system, and it's just a matter of launching your bot, which executes this task in your accounting information system. Oftentimes, it's just a matter of setting up the bot to execute appropriately. So this is the first step, and then of course, once the goods are stored, it moves on. We receive the invoice from the vendor, and then we execute on that invoice. Oftentimes, we match it with our receiving report. It gets merged, and then we execute it to accounts payable. And then so once it gets executed to accounts payable, it of course updates what we have in inventory, and then it makes its way onto the ledgers to be then executed through a check or electronic funds transfer to the vendor. Again, just think about the physical flow. That's what ultimately helps us to understand the purchasing and payment processes. Uh, so companies oftentimes mitigate their risk with purchases because, as you know, there's risk associated with all aspects of business, especially when it comes to purchasing and payment. That risk sometimes involves the over purchasing or the under purchasing of inventory. And oftentimes it has to go back to the roles and responsibilities of our employees, and also uh, e- uh, the proper execution of our accounting information system if it's automated, right? Um, so it requires a certain level of judgment when it comes to purchasing. And looking at these risks, the first risk to look at here is the control activities to which are applied to all potential risks within the business process. Automation is something that we need to look at very closely at to make sure that our automated control systems are set up properly. We would need to make sure that our vendors are updated regularly within our accounting information system, that we have accurate pricing information in there, and that, of course, all of our proper tax documents are also included. More risk involved here. The purchases from unapproved vendors may result in fraudulent activities, receipt of products that don't seem to meet standards, or early or late deliveries. Very important that you vet your vendors appropriately and make sure that only authorized vendors are included in your accounting information system. Monitoring your vendor list is a very important process. So make sure that your company's policies and procedures meet the needs of the business when it comes to selecting a vendor, uh, uh, and making sure that your contracts are properly negotiated. Regularly review, audit your vendor list, make sure that everything's up to date, and that everyone's meeting standard. And of course, ensure that the individuals maintaining the relationship with the vendor table are not involved with those vendors in any way that may be unethical. Another type of risk. purchase from unapproved vendors that are conflicts of interest or unauthorized related third-party transactions, which could result in regulatory or reputable damage to the company. So yeah, it's really important that all purchase orders go through the same process through the purchasing department. And of course, ensure that the person maintaining and updating the vendor table is not involved with those vendors in any authorized way. Additional risk, unauthorized changes to the vendor table that may result in fraudulent purchases. Yeah, make sure that there's a separation of duties. Yep, they're very, very important. Another risk, outdated information in the vendor table may result in financial loss due to inaccurate payment. Yeah. If a vendor moves from one location to another, you don't want to send a check to the wrong location. If the vendor changed legal names for their business, you make sure that the name is updated. If they switch banks, make sure that you have their most up to date bank information. That type of thing. Very, very important to monitor these things. And additional vendor risk, ensuring oral or written contracts prior to the completion of the vendor onboarding process. Yeah. It's so important to make sure that the onboarding process maintains the integrity of the business overall. And so having a proper process in place for onboarding any new vendors is really, really important. Uh, I personally, I don't do oral contracts. I think that those are extremely risky. So written contracts takes priority over oral ones because it's easier to defend those in the court of law. And so making sure that all of your vendors follow the same process for onboarding is really important. When it comes to placing orders, there's a couple risks involved here. So control activities, supply to potential risks in the business process. Yeah, there's a couple different risks and ways to control these. Ensuring that you have a really good enterprise resource planning system, and the automation of that system, making sure that integration is involved with your e-procurement system is really important. Implementing suppliers to the company's paperless value reciprocal settlement, a fancy way of saying paperless shipment of goods, and that notifications conforms with the corresponding purchase. So in today's day and age, a lot of processes are now paperless, but making sure that what is being sent and received match is really, really important. So audit those systems on a regular basis. And use a pre-numbered system for purchase requisitions or purchase orders. Absolutely. The great news is with accounting information systems like QuickBooks or Sage or Oracle or whatever, the majority of them have built-in pre-numbered systems, especially for POs, for purchase orders. Order placement. So additional risk. Unauthorized purchase requisitions may result in unauthorized or fraudulent purchases. Yeah, of course. Making sure that whoever's responsible for those approving the POs is not the same person paying. Yeah. So having that segregation of duty is really important. Unauthorized POs submitted to an unauthorized vendor may result in unauthorized or fault. Yeah, obviously. Ensure that the policies match, right? And that that there's a separation of duties there as well from receiving payment and other accounting responsibilities. Additional risk. Unauthorized POs submitted to an unauthorized vendor may result. Yeah, this goes back to what we had just said. So making sure that segregation of duties is there. Purchase requisitions being split into more than one. Okay, more than one purchase order to circumvent authorized limits. This is big, right? I've seen a lot of businesses do this because there might be a limit on the amount that you're authorized to spend on a PO. For example, I recently did some work with a contractor that had a limit of $10,000 on any POs before I had to move up the chain for authorization, the chain of command. And so, because of those limitations, I've seen companies split purchase orders in order to avoid uh, hitting this limit or triggering higher levels of authorization. And so, yeah, just don't do that. To avoid splitting any type of POs. It's very risky. Yep. Use the matching process with the requisitions and with the POs. Uh, it starts with a requisition and then it moves to the purchase order. So making sure that workflow is seamless, really, really important. Helps the integrity of things. And the last risk when it comes to order placement that we'll talk about is blanket purchase orders. Oh, these ones kill me. Yeah, blanket purchase orders, they're really risky. You want to make sure that there's limits in place with blanket purchase orders and that there's a specified duration. Okay, so it has an end date and it has a spend limit, right? Because blanket POs, those can be really risky. Okay, receiving. I've seen a lot of examples of receiving risk uh, at all levels of business, whether it be a small business or medium-sized business or even large business. Uh, Maintaining physical restriction is critical. So, control activities to prevent potential risk in this area. Segregation of duties. Yes. Uh, the person paying should not be the same person receiving. You see? Uh, Physical segregation of duties. Warehouse storage, production, and shipping should all be monitored and should not be done by the same person. Ensure physical facilities has its own receiving location. So if there's like a receiving dock, where the truck backs up and offloads, that there's a designated receiving area. Only receiving happens in that area. Okay, it's separate from storage, right? Uh, so yeah, having separate facilities is great whenever possible. Restrict the physical access to the receiving department. Yeah, that should go without saying. You don't want too many hands in the cookie jar because some cookies will go missing. Install cameras. Yeah, definitely. Cameras, any type of other monitoring devices, even biometrics. Those types of things are really useful. And of course, control access to the receiving system itself. Other things you can do, implement an e-procurement system, other types of automation, uh, ensure that any types of returns are investigated appropriately. Paper trails are really important here, yeah. Ensure that policies and procedures are properly being met and documented. And of course, implement any ongoing performance programs to control things like shortages, overages, and other product quality issues. Other risks that you might see when it comes to receiving, accepting goods that were not ordered, incorrect or excessive quantities, canceled orders, or goods that are damaged or inferior quality may result in the payment of unwanted items or excessive inventory or even inventory shortfalls. Yeah, you have to be really careful with making sure that what you ordered is what you're receiving, and it has to be in a quality that is expected, right? So be very, very careful and document what it is that you're receiving versus and is entered into your accounting information system that your receiving report matches what you see in the packing slip, which matches what you see in the purchase order, which matches what you see in the requisition, purchase requisition. So very, very important that everything matches up and that the quality matches up and costs are the same, etc. And then another receiving risk is accepting goods earlier or later than the scheduled. Yeah, so this could be problematic because if you receive a delivery outside of a delivery window, oftentimes you're not going to have an employee there to appropriately receive that inventory, which might result in a loss of a receiving report. So you want to make sure that someone's there to receive it at the expected time on the expected date, because that employee's going to need to enter the data into the system, and if no one's there, it doesn't get entered, right? And that's also one thing you do not want to automate is that type of receiving. Goods being received but not recorded. Yeah, this happens sometimes. Or recorded at the wrong quantity. I've seen that. Recorded the wrong inventory account, subsidiary ledger. Been there, done that. Or recorded the wrong reporting period. Yeah, absolutely. That could affect your cost of goods sold, as well as incorrectly recorded liabilities. So automating some of these processes you can definitely do. An e-procurement system would help to eliminate some of those types of errors. Implementing the ERS, definitely. Generate reports that, of course, allow for the purchase orders to be fulfilled, that match up with the requisitions, and of course, match account numbers to each purchase requisition and purchase order. The best way to ensure that this is done appropriately is to make sure that your inventory list in your accounting information system is up to date and matches the inventory numbers associated with your vendor. So that way, the system, if it's automated, will understand to match those inventory numbers appropriately, right? Because otherwise, it can lead to the wrong recording of inventory in the wrong accounts. And then the last two things that are related to this would be matching goods received with the purchase order and matching the date of when it was received with the purchase order. So yeah, and of course, those can all be automated as well. So we talked about inventory. Let's talk about fixed assets briefly. Fixed assets, as you know, are property, plant, and equipment. They help to generate the company revenue. And of course, we need to acquire property, plant, and equipment. How do we do that? We do that through an account called capital expenditures, or CapEx. And this is usually done through a combination of equity, debt financing, equity financing, or and cash from operations, right? So, and that would be our working capital, which is generated from the cash from operations, right? So we use working capital in order to grow the business. Working capital is how we would use capital expenditures appropriately for the purchase of property, plant, and equipment. As you know, fixed assets go through their own life cycles. First, of course, is the procurement of property, plant, and equipment. We receive and tag property, plant, and equipment. All fixed assets should be tagged appropriately in your accounting information system through a unique identifying number associated with that asset. Recording that fixed asset appropriately in your accounting information system, and that, of course, is related to the depreciation of that asset. You also want to make sure that everything is appropriately reconciled. But number 5, the depreciation, right? So as you know, fixed assets oftentimes have their own unique depreciation method, or the number of years we expect to use that asset. For example, uh, the number of years on a building is going to be a lot different than the number of years on machinery. So, for depreciation purposes, whether you're using um, straight line, double declining balance, you're using the maker's depreciation report, whatever it is, and it's whatever is governed through proper GAAP accounting here in the US, you want to make sure that your accounting information system understands what depreciation method you're using, the useful life of the asset, and the not just the purchase price, but you will want to make sure that you record the acquisition price of the asset. Acquisition cost of the asset usually includes the purchase price, installation, uh, insurance, shipping, etc. All of those things together total the acquisition cost of the asset. So that would be your recording uh, cost of the asset. And then the last step is, once at the end of its useful life, disposal or transfer. So how do we acquire fixed assets? There's really four stages involved here. One, of course, is procurement, then the receiving and tagging, recording the fixed asset, and of course, reconciling. The acquisition flow chart looks something like this. We prepare for the purchase requisition. It goes, is purchase, yes, is necessary, of course. Authorize the purchase, select the vendor, prepare for the purchase order, and send it to the vendor. Very similar process to what we would do with inventory. Once we receive it, we inspect it, it gets delivered, we accept it, it goes into receiving reports, it comes back to a requisition department who reconciles, yeah, and tags it. And then, of course, once we receive the invoice from the vendor, we match it back to our requisition and purchase order to the receiving report. We update the accounts payable ledger. We eventually pay that ledger, reconcile that, and then, of course, the process ends. So internal controls very necessary to be in place for fixed assets, because there's a number of risks associated with it. We need to prevent unauthorized purchases. We need to prevent any type of situation like bad rigging or the overstatement of those fixed assets because of capitalization expenses. Yeah. So all of these things are things that we need to be aware of. So when it comes to bad rigging, what does this mean? A couple of things here. Employees collude with vendors on occasion, and that of course leads to fraudulent activities. So it's rigging the bid, right? Uh, uh, it's important that in business, when you're acquiring property, plant, and equipment, that you place bids for those property, plant, and equipment, or your vendors place bids with the company in order to secure the contract for that purchase. We typically do 3 or more bids from our vendors, and we usually go with whichever one is the most logical, not necessarily the cheapest one, and not necessarily the most expensive one, but you want to go with the one that fits the needs of the business. Sometimes rigging of those bids comes into place. Employees collude, or the vendors collude, right? So it's very, very by curious sometimes. So be aware of these risks. Avoid any type of kickbacks. Avoid any type of other issues when it comes to contracting. So that's all procurement. We talked about procurement. Now let's talk about payments. Payments, of course, is the disbursement of cash. We're paying for goods and services provided. We're paying for our purchases, right? So, and of course, we do a lot of our payments either through check or cash, which are all the same as check or cash, and that's all the same as cash, as you know. We record all of our payments through journal entries as you would expect, which of course impact our cash balance and account on our balance sheet. We use cash payments for operating, investing, and financing activities, which are all found on your statement of cash flows. There are two primary methods for paying for purchases. One, of course, is to make cash payment. The other is through accounts payable, also known as credit. Credit is recorded on accounts payable, as you know, and that just means that we've received the bill but have not yet paid it. Here we have our bakery example. Starts with a purchase order. We receive it, goes to an invoice. The invoice, we agree to pay it. It goes to the invoice process in our accounting information system, which moves on to our aging report. Once it hits that 30 days or whatever the credit terms is, we issue payment for it through EFT or a check. Then, of course, we update our cash journal accordingly. Yeah, this is just the physical flow of it. So really important to manage your cash in business because cash is the most liquid asset that the business has. It has the greatest potential for fraud, whether it be through theft or other type of disbursements that should not be happening. So what are the risks with payments? There's tons of risk with payment. You need to maintain segregation of duties and responsibilities, just as you know to do with other accounting processes. Separate those responsibilities. The same person receiving should not be the same person paying. Ensure independent bank reconciliations are done by management. Audit. Make sure you have a paper trail that everything can be identified. Don't allow checks to be made to cash or bearer. That's extremely risky to do that. The only time that should ever happen is for a petty cash fund to be established or to be reimbursed. And that should only be done, well, it should actually be verified by two people, the treasurer and the CFO or CEO. Check supplier invoice should be, of course, matched to the purchase orders. Yeah, really, really important. Typically what I do, and this is the best method, if you're getting ready to pay, that means you already went through the requisition, the purchase order, the packing slip, the receiving report, you got the invoice, and now you're getting ready to pay, right? Through putting in accounts payable, you generate the check. So that's six documents you have right there at a minimum. And so what I do is I attach all 6 documents together because that represents the whole transaction in one set of primary documents. Make sure that invoices are not duplicated. Yes, your accounting information system has the ability to make sure to prevent that from happening. But make sure nothing gets voided out in your AIS because that leads to huge risk when it comes to payment. Don't void anything. And if you do have to void something, make sure that it gets verified by more than one person. Now, other risk, unrecorded payments may result in the duplicate payments. Yeah, that's why we make sure everything's recorded. Right? Compare the total with what's being authorized, yes. Oh, this is a good one. Payments recorded in the wrong vendor account may result in duplicate vendor payments. I've seen this happen before. You have two vendors with very close names. Uh, you look through your vendor ID list and you say, okay, that's got to be that one. You selected the wrong one, or you have duplicate vendors. Yeah, make sure to avoid duplicate vendors in your accounting information system. Incorrect payment amounts may result in over or underpayment. Yeah, make sure that your invoice amount is what you're paying, or if you're doing a split payment method or whatever the case is, you want to make sure that your balances are updated accordingly in your accounts payable system. That's a good one. Payments made for unauthorized or non-existent purchases. Yeah, clearly that's fraud, right? So apply limit testing. Make sure that there's a three-way match, as I described that 6 document system that I like to do. That's also considered the three-way match, but it's technically a 6-way match if you think about it. Compare payment information, payment information with the purchase order and receiving report. Yeah. And your AIS can handle a lot of this stuff pretty easily. Oh, this is a good one. Paying invoices twice. Yeah. Did I pay that bill or not pay that bill? I don't remember. Your AIS remembers, so check the AIS. Yeah, don't pay the same bill twice. I've done that once. That's happened to me once before. The AIS did not catch it, but that was also because back then there wasn't a whole lot of automation. Suboptimal use of cash may result in the loss of assets or poor cash management. Yeah, of course. Yeah, managing your statement of cash flows is critical. It is critical to the operation of the business. So you could pay early when you can to get discounts. Encourage your customers to pay you early by providing them discounts, but it also encourages that cash flow coming in, right? And looking at your enterprise resource planning system, you know that and we've discussed this last week, there are 6 primary elements. There's financial, sales, your CRM, supply chain, production, and HRM. All these tie into your ERP or your enterprise resource planning system. And we can see where purchasing, receiving, and inventory come into play. And of course, that's with your supply chain management. And then, of course, on the other side, fixed assets and accounts payable, it's all finance. This just shows you how everything's integrated. Designing your database in your ERP, that's super important. You need to make sure that all of your accounts have their unique identifying numbers, which is usually established through your your chart of accounts. And your chart of accounts will also help you when it comes to managing your vendor list. So your vendor list should be unique. Each vendor has their own ID number. Each purchase order has its own ID number. Each payment has its own unique invoice number. You'll notice, and of course, inventory. Inventory has their own identifying numbers. Ensuring that each element has its own unique ID is critical because, and especially if you're going to use automation in this process, you want to make sure that those unique IDs match up, because otherwise it can lead to some of those risks we talked about. The three-way match, again, having that paper trail, so critical, right? Match the purchase requisition with the purchase order, match the purchase order with the receiving, the packing slip. Packing slip gets matched with the receiving report. The receiving report gets matched with the account payable and check. You see, uh, connecting those is really, really important, especially for any type of audit in the future. Also helps with reconciling, right? Reporting and insights. Your data stored in your accounting information system, that data gets ultimately turned into reporting and analysis, as you know, because it flows on to not just the income statement, balance sheet statement, cash flow statement, retained earnings, but we can also generate lots of other reports from our accounting information system, like a detailed receiving report that highlights all the receipts we have from each vendor, etc. Um, there's so many different reports that you can look at, and you can analyze the data to your heart's content. Um, it gives you insight into what's happening with the company. Along those lines, let's talk about raw materials. So raw materials, we purchase those from our vendors. They eventually become from raw materials to go into work in process to finished goods, right? So understanding that concept is really important because when it comes to acquiring those raw materials, we try to do things just in time. When we receive our raw materials, we record those during this accounting period of which they were received. It's important to identify the vendor, what was received, who received it, what was the condition, the quantity, obviously. All of those need to be tracked, and of course, the total amount. Uh, when the purchase orders are filled and open, your accounting information system will tell you the purchase order executed, if it's been completed, filled, or if it's still open, pending. Okay. It'll also, you can also extrapolate aging data. How long is it the purchase order been sitting there? Right? 30 days, 60 days, 90 days, 91 plus. You see. 180, whatever your accounting information system templated. But you can identify, 0 to 30, 31 to 60, 61 to 90, 91 plus, or 91 to 180, or 120, etc. Back order, if anything's missing from your vendor supplier, what items are on back order, that could also be a part of your accounting information system. And of course, the vendor master table. This tells us the list of vendors that we have authorized. And it provides all of their individual detail. All this information is used in our analytics. Uh, and looking more at the analytics, so vendor performance. How long did it take to receive the order? When it was issued? What was the condition it was received in? That's all ties back to vendor performance. Receiving reconciliation, what was received against the purchase order when everything needs to match, right? And of course, vendor prices. As prices change from our vendors, making sure that we're updating those changes accordingly, really, really important. The frequency of the vendor, how often are we purchasing from that vendor over time? And of course, duplicate vendor data. Be really careful about duplicate data, especially in your AIS when it comes to your vendors. It can be extremely risky. If a vendor is no longer there, we mark them as being inactive. Only utilize those that are active. Make sure that there's no duplicate information, because that could lead to a lot of problems down the road. I can tell you from experience. Vendor employee comparison, making sure that there's no relationships there that shouldn't be there. Vendor address, make sure that all of that's up to date. Discounts, this goes back to your payment terms. Make sure your payment terms are are updated so you can take advantage of discounts when they come around. And of course, you want to calculate your financial ratios to ensure that we're maintaining our benchmarks and comparing those to our actual performance. Nice example of a data dashboard. I like this one. This probably came out of Power BI or Tableau. Power BI, as you know, is a great way to visually display information. This may have also come out of an accounting information system. A lot of accounting information systems like QuickBooks Online are really catching up to speed when it comes to visualization. And we can see this type of information displayed in a meaningful way. You just click on whatever it is, and you can zoom in on those metrics and performance for each vendor. Yeah. Okay, so we talked about that. Let's talk about fixed assets real quickly. Fixed assets, property, plant, and equipment, as you know, they all get organized the same way that other inventory would. The only differences that we look at when it comes to property, plant, and equipment is going to come under our fixed asset listing. We list them according to their original costs and their current book values, and this, of course, is related to our depreciation methods. Yeah. So original costs include the purchase price, installation, shipping, insurance, etc. It's what we call the landed cost, right? Or the acquisition cost. Fixed asset dashboard tells us what percentages of each identified by their overall costs. This is good to know because it tells us how well we're utilizing our assets overall when it comes to generating revenue. What can we learn from it? But we can calculate the fixed asset ratios in order to figure out what the turnover rates are. How quickly we're generating based off of the utilization of those fixed assets. Make sure everything's tagged. Both a physical tag, unique identifying number on the inventory, on the fixed assets, but also in your accounting information system. Everything should have a unique identifying number when it comes to assets. And everything should have a location. Yeah, make sure everything's located, and that the bidding patterns are also identified if it's a recurring fixed asset type of purchase. Accounts payable quickly. Accounts payable, as you know, everything's tracked by vendor. The account payable representing the balances for each vendor. And then, of course, distributions based off of those vendors. Account payable subsidiary ledgers are always identifiable in your accounting information system. The vendor aging report helps us to understand what our aging looks like for our overall accounts payable. And of course, our invoices are entered, and they'll be able to tell us based off the invoice if it's overdue, paid, or open, or it's and what the aging is on it. Financial ratios we can calculate based off of accounts payable turnover, of course, in days as a percentage of total assets, and cost of goods sold average account payable. And of course, the approval of payments process. What can we learn from also vendor employee testing, early payments, vendor invoice numbers. Every invoice has a unique identifying number, and of course the three-way match. And here's an awesome example of dashboard for your accounts payable. I use something just very similar to this in QuickBooks Online. Okay, that is the end of our discussion on purchases and payment processes. We are in week 3 of our accounting information systems course. If you have any comments, questions, or concerns, please feel free to email me, call me, or set up office hours. I am here for you all the time. Thank you so much for your time today. Appreciate all of you. Have a wonderful rest of your day.